Well, hello and welcome to another video by Financial Learning. On today's video, we're going to be talking about Cleanspark Inc.'s latest press release. This has to do with their $650 million offering that was just announced as closed. This is that zero interest convertible note. Also, we're going to be talking about the short interest on Cleanspark, and then I like to talk about their playbook that they shared with all of us. I did some research on the SEC filings, and I think that you guys will definitely want to see this, so please stick around. So without further ado, let's get right into it. All right, starting with the PR, this is, of course, from December 17th, 2024, and has to do with their announcement of this offering coming to a close. They were able to negotiate with this specific investor, and they did opt for the additional $100 million to be added to the offering. So that is a total of $650 million that Cleanspark will be getting funded. There is, of course, some discounts. So Cleanspark did disclose exactly how much of that cash that they will be getting to do some of their operational activities, as well as some share buyback and some of their covered cap calls. We're going to get into all of that. So let's jump right in. So looking at this, of course, I already mentioned this is a 0% convertible note. It's a senior convertible note, and it has a maturity date of June 2030. So there's plenty of good runway for Cleanspark to be able to take this capital and go ahead and invest into their operations. Again, we all know, if you've been watching Cleanspark, that they are not buying spot Bitcoin with this money. Instead, they are looking for investing it into their miners. Their cost to mine each Bitcoin is only $40,000. So, a lot of people say, why purchase spot Bitcoin for $100,000 when you can mine it for just $40,000, leaving you to net profit of $60,000 per coin? And then, of course, as the price of Bitcoin does fluctuate, Cleanspark is still going to be able to take advantage of that. So I do think that this is a rather smart decision by Cleanspark. So first thing I want to talk about is this capped call transaction. They did go ahead and give us the exact details for this. So it does have a capped price at $24.66. That is, of course, a 100% premium over the closing price of when this offering took place, and that was at $12.33. Of course, these capped calls are a way that the company can hedge the share price going up. So instead of having to pay this investor that premium amount, their capped call transaction does cover that increase of share price up to that $24.66 share price. So whether or not they were going to use share equity or they were going to use cash to pay this investor back, this is a great way that they are able to spend some of this initial money in order to kind of cover that and allow some growth for the stock without them getting themselves into a situation to where they have to do some heavy dilution. So again, this is a great way to hedge the dilution going forward. All right, and the second way that the company is able to mitigate some of the dilution is by the share buyback. So you can see here that they did purchase 11.76 million shares from the common stock, and they've went ahead and kind of shelved that, if you will. And they did this using a total purchase of $145 million. So again, this helps from the covered cap call amount at that $24.66. There is some additional breathing room, another 11.76 million shares worth of breathing room. That actually gets the exercise price before dilution occurs up to $33.67. So again, if you do follow TeraWolf, you would have noticed that they did some similar calculations, some similar activities in their secured convertible notes. The only difference is theirs actually had a little bit of an interest rate for the investors. Of course, with Cleanspark, they're at zero interest. So again, this is a very lucrative secured note that they have gotten themselves. All right, and let's go ahead and get a quote from the CEO. This is from Zach Bradford of Cleanspark Inc. Says, "We are proud to have closed this offering with some of the strongest institutional investors in the world and are excited to share that our growth through 50 exahash per second and beyond is now expected to be more than fully funded from the proceeds." Zach continues on. "In addition to funding the growth to 50 exahash per second, share buyback, capped call, the additional capital will allow us to keep adding the Bitcoin we mine to our balance sheet. Beyond our expansion efforts already underway, we remain well positioned to continue executing on opportunistic acquisitions. Again, Bradford continues. Importantly, this offering provides our stockholders greater clarity on near-term share count, given our ATM offering was completed in early November. And if you were following the filings, they did say from October 1st through December 3rd. They talked about the ATM coming to a close. So it looks like it actually closed sometime in November, but that December 3rd was just the date of the filing, I assume. Continuing on. We have no immediate plans to commence another equity or equity-linked offering, as the capital received from this offering sufficiently covers our near-term strategic objectives. So again, if you're a shareholder, this is excellent news. As you are well aware, there was some dilution that occurred with some of the at-the-market offerings. However, it is great to hear that they do not plan on continuing any more of that. Another key thing to read is that based on this funding, they do not need to sell any of their current Bitcoin HODL in order to continue funding operations. So I thought that was a good little nugget as well. So they will continue to build upon that Bitcoin HODL, but they will be doing that through mining, not by purchasing spot Bitcoin. All right, jumping into some of the proceed information. So it says the net proceeds to the company from the sale of the convertible notes were approximately $633,600,000 after deducting the initial purchaser's discounts and estimated expenses payable by the company in connection with the offering. The company used approximately $90.4 million of the net proceeds to pay the cost of the capped call transactions. If you recall, they did originally say something around $70 million or so, but because this investor did go ahead and opt right away to go ahead and purchase an additional $100 million worth of these convertible notes, they went ahead and increased that capped call transaction amount. Also, $145 million to repurchase shares of the common stock from investors in the convertible notes, and intends to use the remaining proceeds for repayment in full for amounts outstanding under the company's line of credit with Coinbase. They had already announced that, but they are just confirming that is still the objective here with this money. Also, some of their capital expenditures, potential acquisitions, and general corporate purposes. And lastly, they did share a little graphic here in terms of exactly how the shares in the form of dilution, exactly at what price would that dilution impact actually start taking place because of the share buyback. You can see they did provide a good amount of runway for the price without having to get into dilution. That's at that $24.66. And lastly, if you look at that graphic they provided, I will be blowing that up in just a moment. All right, and one other key feature that has been built into this specific offering is the ability for the company to basically call back or decide to close this offering after 3.5 years if the share price does reach a 130% of the conversion price. So that would be at $19.23. Again, a couple other things about this offering. They do talk about the capped covered call. You can see that provides runway for the price to continue to rise without impacting dilution up to $24.66. And then at that point in time, that's when that share buyback will take place. And that gets you all the way to that $33.67 price range. At that point in time, that's whenever there will be some dilution in terms of share count. But if you're already currently invested in Cleanspark, at that point in time, there would already be a significant amount of profitability for these shareholders. All right, jumping into this. This is the short interest. First thing I want to show, this is going to be the Friday short interest compared to the Monday short interest. And then if you want to look at this, this is a 7-day graphic. You can see how the short interest has been growing. So on that Friday, the short interest had grown by 17.8 million shares. Jumping in one additional day, you can see it went up to 19.92 million. And again, this is just a 7-day period. On the next slide, I'm going to show the overall short interest amount. But a couple other things really important on this slide is going to be the days to cover. You can see it sitting around 2 days on both that Friday and on Monday. All right, and on this slide, you can actually see the live short interest. Again, this is a feature from Ortex, as well as the amount of shares available and the cost to borrow percentage. And again, this is just from one of the exchanges. Don't get me wrong, there is various amounts of shares available, as well as percentages for cost to borrow. But this is just a good baseline, if you will, to get an overall idea of what's going on the short interest. So again, total amount of shares shorted on Monday was 66.11 million. That equates to about 23.2% of the outstanding shares. And then looking at Tuesday's number, it jumps up to 73.57 million shares being shorted. That is 25.82%. This is a very heavily shorted stock. And with this information that just came out, I feel this does give long investors somewhat confidence looking at the share buyback. This is going to put additional strain on these short interest parties. If you also pay attention on Monday's live short interest, you can see that there were still 4.7 million shares available for shorting or for borrowing at a cost to borrow about 0.58%. When you look at Tuesday's availability, it's down to just 800,000 shares, and the cost to borrow has already doubled. It's up to 1.12%. So I think that, again, kind of shows the impact of the share buyback, how it takes away a lot of the liquidity, if you will, or the amount of the volume, the sheer volume of shares available to borrow in order to short. So again, I think that share buyback happening immediately was very good for the company. And it does give the investors that have this outstanding convertible note a little bit of confidence on their long exposure. And lastly, I'm glad you guys stuck around. This is the Cleanspark Playbook. I took some of the notes from the last two SEC earnings filings from Cleanspark, and I kind of put it all together here. I'm going to go ahead and break down their commitment of spend as well as their cash on hand. Take a look at some of these miners. We're going to look at some of the statistics here and then get an idea for exactly how they're going to get to that exahash amount that they're planning for in 2025. As well as take a look at how they could utilize some of that remaining capital, some of that remaining cash on hand to get there. So first thing I want to take a look at is going to be that green line up there. Starting at the top left, this is going to be the initial purchase order for 100,000 of these S21 Pros. Each one of these S21 Pros gives you 234 terahashes per second. That is the amount. And if you're not familiar with the conversion, for every 1 exahash, it is 1 million terahash. So when you want to convert this mining fleet over to exahash, you're going to need to take those numbers, multiply by the total number of miners, and then divide by 1 million. And that is how you can get that exahash amount. So you can look here at these 21 Pro amounts for the 100,000. That provides 23.4 exahash. This PO was actually announced and it's part of an April 2024 PO. The second PO that was announced, and these are both part of this bitmain vendor. This was for a total of $167 million. And this is for those S21 XP immersion style. So these are the more efficient style, these immersion coolant type of miners. You're going to get a better, more efficient in terms of your exahash compared to the kilowatt consumption here. So looking at this, each one of these miners provides 300 terahashes. So again, looking at the amount at 26,000 miners, these are the immersion miners, this provides Cleanspark with an additional 7.8 exahash per second. And this PO was actually placed in August of 2024. So looking at those two on their latest earnings report, this would be their 10K. They did disclose a little bit about the financial activities behind these purchase orders. You can see that as of that September 30th date, they had already made a total amount of payments at 376 million and change. And you can look, they also mentioned an accounts payable amount at 49.9 million. So that's going to leave them with a little bit of additional committed spend, and we're going to break that down in just a minute. I did want to also go over this orange bar though, since we're still talking about these miners, and this is the Avalon A1566Is. These are immersion miners as well, except these came from Canaan, not from Bitmain. And this purchase order was actually put out by Canaan on November 1st. So this PR would be after the earnings report. That is why there's no mention about this in the earnings report. This is for 3,800 of these Avalon miners. And if you do the math on that, each one of these miners is 249 terahash. So the total amount of miners gets you almost 1 exahash at 0.9462 exahash per second. The only thing that this specific press release from Canaan did not include was the cost. We don't know what the price point was that Cleanspark purchased these miners for. So that is the only uncertainty that I don't have on this spreadsheet. Just wanted to disclose that with you all. You can see I have that in red there. Jumping down into future spend. So again, if you look at that earnings report, you can see exactly what Cleanspark is planning on spending some of their additional capital on, starting with the remaining miners. So there's a remaining PO open at 115 million or 115.299 million. There's some modular immersion data centers. This has to do with some of their build outs that they have going on right now for another 135 million. The construction information, or the construction locations currently in process, that's 15.2 million. And then their Tennessee real estate. So there was some additional cost involved with that grid acquisition that included some retail estate. So this was $2.5 million for that. There was some power deposits. So whenever Cleanspark did purchase grid, they actually had to pay their power deposit back as part of the purchase agreement. Also, jumping into today's offering, I went ahead and added on both the capped call transactions as well as the share buyback amount. So the total spend comes in at $509 million. And that is based off of all of the information they've already disclosed. And then you go ahead and look at the cash on hand, and you're going to see how I was able to come up with the remaining cash. So you can see that as of September 30th, they had a total cash on hand at 121 million. And they also disclosed that after September 30th, they raised an additional 191.6 million when they closed out the remaining of that at the market offering. And then miners sold. They actually did get some money from third parties with the sale of some of their older, more aged miners for $29 million. And then the last thing, of course, is the cash from this convertible note loan. And this is the one that is not due until 2030. So if you look at their overall cash, they're sitting at a nice, healthy, almost $1 billion at 975 million. Subtract from total spend, they still have $465,953,000 available. So I have a couple other ideas that they most likely will be taking advantage of in order to hit their 50 exahash per second goal, their target for calendar year 25. So starting off, if you do look back on their 10Q, this would actually be the one back from June. You can see that they did have an open available purchase order. It's called an FSPA for $322,500,000. That would allow them to purchase an additional 50,000 of these S21 XP immersion for each of these. Remember, this is for 300 terahashes per miner. So that would actually provide them with a total of 15 exahash per second. So again, if you were to add this pending purchase order, or this potential purchase order for these miners with the rest of these upgraded miners, you're going to add all of this up, and it's going to come out to 47.1462 exahash per second, very close to that 50 exahash per second goal. And remember, folks, they currently have a total of 195,000 miners in their fleet as of November. All of these new miners combined would be 179,800. So again, they still have all of those other miners. They did mention that they will continue using some of those aging miners where it makes sense in some of their locations where they have a very good cost per kilowatt hour. So again, I think that just based off of these upgraded miners, as well as utilizing some of their existing miners, they are well on their way to that 50 exahash per second. So you can see right here from a Playbook situation, it looks like Cleanspark is definitely on the up and up. A couple more things. Again, that note will be maturing in 2030. So let's look at the ROI involved with that. So you can see I have here, looking at this 47.1462 exahash per second. That is the amount hash rate that these upgraded miners will be providing. That actually gets them a total monthly Bitcoin mining at 907. And this is as of the current hash rate. Of course, as more and more Bitcoin is mined, it does become a little bit more and more difficult. So you probably want to look at a rolling out, or you probably want to look at more of a 6-month average on Bitcoin mine. But again, remember, I'm using the September efficiency rates, so the cost to mine. And you can see, based on that September disclosure, the cost to mine, this includes the miner's depreciation as well as some accelerated depreciation, comes in at $39,936 per Bitcoin. So again, that still gives them a very nice, healthy profit margin, especially with Bitcoin sitting at the 6-figure amount at 100,000 or more. So we're going to go ahead and use 100,000 cost per Bitcoin in the remainder of this ROI as the example here. So you can see their monthly profit. This is not revenue, this is profit. Their monthly profit to mine Bitcoin with this 47.1462 exahash rate is going to provide them with $54,497,000 of profit. Looking at the yearly profit margin, again, if Bitcoin remains at 100,000, we're looking at $653,975,000. Just looking at the specific miners that are on purchase here, compared to the cost of Bitcoin and everything, you can see that there is a ROI of 19 months. So that's pretty good if you consider a lot of these miners have about a 3-year life on them. So after that first 19 months, they're going to be in the money. So again, any of the depreciation or anything like that in terms of the miners, you may actually see an even lower cost to mine the Bitcoin at that point in time. Again, it's all going to come down to what the hash rate requirement is going to be to mine a Bitcoin, month over month. Of course, that will be changing. And it's going to be important to make sure that they are keeping very good relationships with their power providers. They want to make sure that they can keep that kilowatt per hour rate at a low amount. All right, so based off of the playbook, again, that Cleanspark has laid out, this is all publicly disclosed information here. It does look that they are well poised for the remainder of the fiscal year to not have to really worry about any more of their ATM or any more of the equity financing. It looks that if they go ahead and utilize this capital to purchase these additional miners, they will be able to recoup plenty of profitability in terms of mined Bitcoin to be able to pay off that entire convertible loan in full. Again, this is 0 interest. And at that point in time, when it's due, they will have already completely paid off their miners and stacking Bitcoin on top of that. So again, I'm very excited to see the progress of Cleanspark, and I'm sure we will be getting some more announcements as more and more of these latest model miners are implemented into their fleet. All right, I'm not going to get into the whole Bitcoin hodl and the amount of interest that they could potentially bear. None of that information has been disclosed yet, so a lot of it is going to be very speculative in nature. I like to stick to what's been provided to all of the investors via filings as well as some of their presentations. So with all that being said, I hope you enjoyed this video. If you did, please consider giving it a like. Subscribe to the channel if you haven't already. Drop me a comment. Let me know your thoughts about this. How did I do in covering this convertible note offering, as well as breaking down some of these financials? And with all that said, hope you all have a great rest of the day, and I'll see you on the next one.